while now, if you're invested in the stock markets, you were pretty happy. You just watched the chart go up and to the right. The game appears to be changing. Another rough day out there. Patty Lover-Reid, CTV's chief financial commentator. Time to start thinking about where we're invested because the game seems to be changing.
You know what? I think we may be at an inflection point, but we might not be there just yet. And that's exactly what's going to make a market. You can understand that investors are dumping stocks. The TSX, not the place to be so far this year. With rising yields in the U.S., the 10-year Treasury north, or let's say it's hovering right around 3 1/4. The bonds here in Canada, 10-year around 2.5. And in the past, as interest rates start to go higher, investors could comfortably move into bonds, lock in their gains, but there really isn't a place to hide right now because you're seeing sell-off in the bond market, in the equity markets, some moving into cash. Any way you look at it, it's one of those moments where you say, maybe I better look at my portfolio. And if anything, you want to be in good quality investments if you have that long-term perspective.
I'm hearing a lot of that on Market Call from fund managers who will take a look at a company and say, I know they're getting caught up with everyone else in the selling, but I like the name. It's a quality name, and they think there are opportunities. But this is where you have to be nimble, right? It was quite a bit easier in the past just to sort of catch the ride. The momentum, everything was moving up. I'm just going to throw my money into the market. Now you really got to do your homework, figure out what's a quality name, what is trading at a discount that shouldn't be trading at a discount.
Yeah, so I think what you're saying here, and I absolutely agree with you, it's not eliminating risk, it's reducing your risk in your portfolio. Because as interest rates start to go higher, even interest-sensitive stocks, companies that have to borrow, their borrowing costs are going higher. So, you know, it's going to be tougher for them as well. But let's sort of back up when I said we may or may not be at an inflection point, because looking at the fact that central bankers in Canada and the U.S., they want to raise rates. A lot of the data points suggest that rates are going to go higher, but they're coming off a very low threshold. And typically inflation, when it heats up, you think, okay, time to get out of the stock market, move into bonds. Well, inflation is starting to show some signs of heating up, but it's not high. And we still have growth. So I'm not sure that now's the time, but what I can tell you is now's the time to say, okay, is my portfolio in terms of asset allocation aligned to who I am as an investor?
How much risk can you stomach? Have you been a risk taker in the past?
Yeah, exactly. And not only how much are you willing to take on, how much can you afford to take on? What's your time horizon like? I'm okay with a 4 to 6% return. I'm in a wealth preservation mode. Someone much younger than me can say, you know what, volatility, it can be my friend. Just because something's down doesn't mean I want to buy in because it could go lower. But I do have, you know, time on my side.
Time to build it, time to get it all back if you lose it.
Yeah, you know, and I'm the first one to suggest that is not the case I want to be in right now. So I am looking at what do I have in cash, what do I have in fixed income, how much exposure do I have to the stock market, how diversified am I within each of those asset classes as well.
That was CTV chief financial commentator